Hi, so we're here today with Andy Valvona, National Account Manager for Fleet Mortgages, one of our specialist buy-to-let lenders. And we're going to be asking Andy a few questions today, just hopefully help you understand Fleet Mortgages proposition a little bit more. So welcome, Andy.
Thank you.
Firstly, Andy, so what are Fleet Mortgages' unique selling points?
Well, Tom, Fleet Mortgages is a specialist buy-to-let lender. We don't operate in the residential space, but we also don't operate in the consumer buy-to-let space, so we're able to concentrate on unregulated buy-to-let contracts. Now that gives us a little bit of flexibility around ICRs and the way in which we underwrite portfolio landlord cases.
Okay, excellent. Also, Andy, what are Fleet Mortgages' income requirements?
Well, Fleet is a responsible lender, so we do have a minimum income. Now that minimum income is $25,000 per annum for the first named applicant. But that income can be made up of a variety of sources. So, for example, employed, self-employed, rental income, pension income, or a combination of all of those areas of income.
Excellent. We know that Fleet Mortgages offers quite a beneficial rental calculation. Can you just expand a little bit on that for us, please, Andy?
Yeah, our standard ICR is 125 at 5. Now that's applicable both to high rate taxpayers and lower rate taxpayers. So it's applicable across the board. And in fact, if you work the figures back, 125 at 5 equates to 192 times the monthly rent. So a really simple example of that is if your client has a rental property with an income of £1,000 per calendar month, 192 times that equates to £192,000 maximum mortgage, subject to loan to value limits and underwriting, of course.
Brilliant. Also, Andy, what is Fleet Mortgages' approach to underwriting portfolio landlord cases?
We have a very flexible approach, Tom, to underwriting portfolio landlord cases. Essentially, we have no limit on the number of properties a client may have in their background portfolio. And in fact, Fleet Mortgages does have clients with 300 plus properties in the background. So we don't have a maximum number in the background. We also don't apply an overall stress calculation to those properties in the background. So what we're interested in is the property that you as an intermediary are bringing to Fleet Mortgages, and we apply our stress calculation to that mortgage or mortgages only. So we also don't ask for a whole host of documentation requirements. All we're asking for is a statement of assets and liabilities, which is effectively a list of their other buy-to-let properties that they have in the background.
Excellent, Andy, thank you. Finally, could you just let us know what your acceptable capital raising purposes are?
Absolutely. This is a very big part of our business. So it's probably easier to explain what we won't lend for, and that is for HMRC tax bills and gambling debts. So any other purpose we're quite happy to lend for. So that would range from business purposes, debt consolidation, home improvements, and any other reason that a client would want to raise capital. But we also have another feature to our remortgaging policy, and that is we do allow day one remortgages. So that's particularly effective in an example where a client has gone to auction and purchased a property with the intention of letting it out, but it does require some significant work. So the client engages with a builder, gets the work done within a very relatively short period of time, and Fleet will then be able to lend on the market value upon completion of that work when the property is ready to let.
Great. Well, thanks a lot for joining us today, Andy. If any of you have got any questions about your complex buy-to-let cases, please feel free to call us today on the Mortgage Help Desk.